Good afternoon, Daniel Weisberg here, David Eichhorn Realty, BathurstandLawrence.com. I want to give you an update. It's been a few weeks. What's going on in the market? Latest figures according to Toronto MLS. The transactions have come back up. They're almost on par with where we were in January 2012, and they basically attribute that to the dip for the last few months was because the mortgages went from a 30-year to a 25-year term. A lot of people put off buying, and now in January, these guys jump back in the market. So we're pretty much at transactional level, activity-wise, we're right on par, and the price increase is about 4% year over year. So we're a little bit up on the price, and they're going to say it's going to be about a small growth this year. That's the prediction. So more or less around 4% over the GTA in terms of appreciation, and interest rates should be low for another year or so. So it's still a great time to buy. And I want to just talk about two things today. A lot of people complain about the price of real estate, or it's too high, it's too low, it's too high, it's too high. I'm talking from a buyer's side. When you sell, obviously you're getting the cash. Price is price. When you're buying, something to consider though is not what is the price, but what is the affordability. And what I mean by that is most people are not going to buy $500,000, $1 million house all cash. They're going to have to go mortgage some of it or most of it. And interest rates are so low. So I've got a few different stats here printed out from the Toronto Real Estate Board, and we're going to go over it, and it's going to give you a little bit better understanding of the affordability in the market and how interest rates play on This is a chart from the Toronto MLS. It tracks from January 1995 up until January 13th, 2003. Now the squiggly lines are per year because obviously different months go up and down. The straight line is kind of if it was just not going month to month but going year to year. So as you see, in January of 1995, the average house price was probably about $200,000. It's continually risen. There was a little bit of a dip in the stock market crash of January 2008, and it's been going up continually since January till January 13, and you can see today we're at about 475. Okay, so I just want to show you that. If you're looking and saying, is real estate a good investment? Well, look at that. There you go. There's the chart. And the next thing I want to show you, which is very fascinating, and this is what most people overlook, is it's called the Affordability Indicator. It says share of average household income used for mortgage principal and interest, property taxes and utilities on the average price GTA resale home. So this is of how much of your income is basically going towards your house costs, which include the mortgages and the utilities. You see, in 1986, it was about 34%. When the interest rates went up in that 1989, 1990, it jumped up extremely high to 55% for a couple of years. And then back in 1993, 94, it's gone down and it's continued extremely low, almost to the lowest peak since 1986 till today. So you see that even though the prices are high... So based on the affordability being low, I absolutely believe that it's the time to go ahead and invest. It's the time to buy that triplex, that sixplex, that 50plex. It's time to increase your holdings now as interest rates are low, and they'll be low for maybe another year hopefully, and then they're going to go up. It's that time to jump on. You're thinking about your first home, jump in there, get it while the interest rates are low, and maybe even lock in. We'll talk about that maybe in some other segments. But again, the affordability is still lower than it's been since 1986. I can give you more advice. If you disagree with this, you can put it on type it in YouTube, and I always look forward to challenges. Again, my name is Daniel Weisberg, David Eichhorn Realty. Thanks for your time. Thanks for watching. 416-787-1712, www.BathurstandLawrence.com. Have a great week.